Investors are looking out for signs of excessive enthusiasm in the market. Many have focused on the huge rise in the AI-related stocks. Our guest, though, says the biggest worry right now isn't the Mag 7 or excessive enthusiasm for artificial intelligence. It's, in fact, an increased level of speculation and volatility. And he says this kind of euphoria can mark the last stage of a bull market. We're joined by Andrew Slimmon, Senior Portfolio Manager at Morgan Stanley Investment Management. Andrew, that's a very fresh take. Thank you very much for joining us. So you're seeing people, for example, putting money into stocks in companies that won't make money for years?
That's right. Exactly. Look, the bear market ended in October of 2022, and the market started to rise, and no one wanted to buy speculative stocks. They want safety. They were worried about downside risks. It's classic early, late cycle. But the more the market goes up, the more people forget that you can lose money, and balance sheets and cash flow statements. That's what puts floor in stocks, and they chase after things that have upside without regard to the downside risk. And what we're seeing is it's not the Mag 7, it's these money-losing, more speculative tech stocks. That's where the money is going. Incredibly enough, off the low of April 8th, it's been the best thing to buy is the most speculative, highest beta money-losing stocks. They've done the most. That is very consistent, Andy, with late cycle bull markets.
Yeah, if I remember correctly, sometimes when things get really heated, people look for companies with no earnings because they think, well, I'll get more leverage.
Right. What's incredible, though, is that index, there are money-losing tech indexes, if you look at them, they're up about 100% off the low in April. Now, in 2021, they're up 400% off the COVID low, but they're still not back to where they were at the peak in 2021. So you can make a lot of money, but boy, oh boy, when the tide goes out, you're going to get crushed.
You think another interest rate cut runs the risk of fueling speculation?
Number one worry. When people ask me all the time, Andy, what keeps you up at night, Andrew? What keeps you up at night? What keeps me up at night is here in the States, we have a combination of monetary policy creating more liquidity, and we have this one big, beautiful bill that's going to send a lot of consumer tax relief money to individuals. So that's a very powerful liquidity combination. It's going to fuel speculation just like it did when we were sending out COVID checks in 2021. And so the more that liquidity fuels the boom, the more it means the bubble grows, which means the more, when bad news comes along, it not only brings down the real speculative stocks, it brings down everything else. That's what we learned in 2022.
However, broadly speaking, you think that the bull market overall is likely to continue for a while?
Well, look, I mean, we can discuss the AI and the bubble in AI, but look what these companies reported. These Mag 7 companies reported unbelievable numbers. And yes, some of them are taking out debt, so they're going to grow faster, but a lot of them aren't. And I think the earnings estimates all went up for these companies. They beat by double-digit numbers. And so what we're learning is, a lot of people come on, I'm sure, Andy, come on your show and say, oh, the market's expensive. Well, the flaw in that argument is that the denominator of the PE, is too low. And it's going up every week now because Wall Street underestimated or overestimated the damage of tariffs, cut their numbers too much, and now these big guys are reporting big numbers, and they're big weights in the S&P, and it's going to push the numbers up. And what we're going to learn, and we're learning, is the market's not as expensive as many have thought.
You have an interesting metric for us here that consistently, if the S&P 500 can make it into the fourth year of a bull market, it continues going for that fourth year at least.
It's never gone down. I mean, now a bear market is a 20% correction. We came within a whisker, but we didn't quite get there. And I've been in the business a long time, Andy. Seems like we get to 19% a lot. But if we get to the fourth year, there's been 7 times since 1950, the market's been up every time. So look, you have some very compelling arguments. You have that track record, you have fiscal policy tailwind, you have monetary policy tailwind, and incredibly enough, Andy, sentiment for the, for a fourth year of a bull market, sentiment is very contained, which I find very curious. Sentiment follows price, and it's still not very high yet.
The old wall of worry.
Exactly.
What would really turn you cautious or bearish on this market? Is there an indicator that you think would be a serious red light indicating you should cut equity exposure in a big way?
Sure. Yeah. So I think it's what we talked about initially. I think these stocks, these money losers, the quantum computing, nuclear, flying cars, rare earth, all that stuff that's losing money. Yes, it's up, but it's not up nearly as much as it was in 2020, 2021, or, the bubble or those types of stocks in the year 2000. So the more it inflates, the more worried I'm going to get. I would like the Fed not to cut purely for the stock market. I think it would be healthier if the Fed didn't cut. And one of the reasons why I think the market sold off last week was, if you look, all the speculative stuff came down after Powell said it's no guarantee the Fed's going to cut in December. So I think less liquidity would actually extend the duration. But the more this bubble inflates, the more we're going to start to move more towards more defensive stocks.
Thanks. It's interesting. You mentioned nuclear as a speculative investment. And I guess, we are going to see big spending on nuclear, but those plants will take a long time, years before they build them. Years.
And don't forget, when you're in the late stage of bull market, you start to think about, how much I can make over the next 5 to 7 years, and you forget about the downside risk. There's a great Warren Buffett quote. I love all his quotes, but one of them is, investors frame their viewpoints looking solidly in the rearview mirror. And right now, the rearview mirror shows a roaring bull market, and that's when people buy real speculative stocks.
Right, the old recency bias. Andrew, great hearing from you. Thanks very much indeed.
All the best.
Andrew Slimmon, Senior Portfolio Manager at Morgan Stanley Investment Management.